Hello and welcome to the Wealth on Purpose podcast. It's here where you can navigate the important financial topics that you want to know about, designed with convenience in mind and a human tone of voice, communicated to you through real stories and a wealth of experience. This is Wealth on Purpose with Brian Diffily and Brian Hartmann.
Welcome back to the Wealth on Purpose podcast. So happy to be here again in this wonderful afternoon. My name is Brian Diffily. Brian Hartmann is to my immediate left of Granite Bridge Wealth. And today we have a very special guest. Very exciting today. We have Hanna Puetter in the house from Windermere Insurance. And we have a bunch of questions, a lot of cool things to unwrap and unpack and get into this quite exciting industry where we're delivering a lot of very robust risk management strategies for your clients at your wonderful company with very sophisticated and unique capabilities. And we're going to talk about that too, somewhat high end, and we're excited to get into it. You've worked for some wonderful brands, including coming from the underwriting side of things, which is really seeing things from multiple dimensions, right? You're navigating these sort of, big value propositions on both sides of the aisle for your clients, which is incredible. So we're going to talk about your experience there and sort of this hidden superpower that you have to tack on, which is your pretty storied and decorated career in hospitality, which I really think is so awesome. So your passion for hospitality in business really is a superpower because it's stemming from not just your experience in this industry that you're making your name in, but also the empathy for the process of delivering an experience for your clients while protecting them from the perils of this world. So this is exciting. So we're going to talk about all those things and you and more. So where should we start? Maybe we can just talk a little bit about the market from a high level and kind of what we're seeing modern day with this industry, maybe some things that people are concerned about, scratching their head about. You can just sort of take us through the market as you see it through your eyes.
Sure. Yeah. Thank you so much for having me.
Yeah.
I'm excited. You hit the nail on the head there with, having the hospitality background. It was a really nice parlay into the insurance industry because there's a lot of empathy involved when you're dealing with protecting the things that mean most to our clients. And then also being there at the end of the day when unfortunately a claim happens and they don't know how to navigate it and you need to be their point of contact and their guide through it all. So hospitality definitely teed me up perfectly for that. But talking about the markets, definitely an interesting one that we're in. In insurance, there's a soft and hard market. We have been in a hard market since COVID. Kind of the difference between the two is a hard market usually comes with higher insurance premiums, which I think a lot of us have been feeling. Usually stricter underwriting guidelines, and then also just limited capacity. There's a lot of carriers that have pulled out of certain markets, therefore reducing the options for us brokers to place our clients. There's a few causes, though. I mean, it comes with increased cat events, which I think we've seen across the board. There's been just multitude of events, more so than there have been in years past, and they've been more severe. Economic uncertainty and inflation increases, making the cost to rebuild homes a lot higher. Losses exceeding underwriting profitability, and then also just regulatory changes and reinsurance market pressure as well. A lot of those premium increases stem from reinsurers reevaluating their treaties in the new year and raising premiums up to like 50% than prior years.
Right.
And ultimately that does need to be passed down to the consumer.
And passed down, and you need to communicate that effectively to someone whose maybe brain can't encapsulate all that and understand. They're seeing numbers and they're seeing mandated coverages and they're seeing things that, they're protecting their life or lifestyle. And you have to be like, hey, listen, here's what's going on. Here's what we need to do. If you want to properly protect yourself, these are the pathways that you need to go down to do that. I mean, that must not be the easiest conversation to have with people, especially the ones that you're working with where, a lot of your clients have multiple homes, cars, different things like that. So, but I mean, again, a life worth protecting in a difficult, or I say hard market.
Absolutely. Yes, definitely. And then I think that we're all hoping for a softer market. I think we were hoping for it earlier in 2025. The way it's leaning, it's probably going to be towards the end of 25, early 26, but we all are going to remain hopeful. And essentially with the soft market, it's going to be pretty much the complete opposite. We're going to see lower insurance premiums carriers offering broader coverage because they feel more comfortable with that, and then higher competition amongst carriers as well, and a lot more options for them. And that's going to be, the strong economic conditions, fewer cat losses, and then excess capital in the insurance market as well. So we're hoping for that all in the future. We've had it in the past. We know it's going to happen again. It's just really a matter of when and not if.
There's some common sense stuff that's happened since COVID, right? Like the hard market stuff. And I think to Bry's point, if you don't have a Hanna in your life, right, you get your bill from your insurance company and you go back 12 months before and you look at it, you go, holy smokes, like things have jumped up, right?
Mm-hmm.
Coverage is. But if you know that it's probably as a result of your home has probably gone up in value since COVID, right? Since 2020, I'm sure most of our listeners, no matter what coast you're living on, you've had property increases. You've seen that the weather is changing, right? We're getting a lot more storms, to Hannah's point. So naturally, those are the ingredients that go into the underwriting process of all of this kind of stuff. People also during COVID spent enormous amounts of money upgrading their homes, right? We were all stuck inside for so long. And that floor that you kind of walk past on your way in and out of work every single day that you didn't really spend a lot of time staring at. Now you're looking at it 12, 13 hours a day. You're going, okay, let's do some projects. Did you see some of that too?
Oh, absolutely. And that's a regular question that we need to be asking upon renewals and everything is what's changed with the home? Because you may have just upgraded your kitchen and not thought anything of it insurance wise. But you want to make sure that there's proper coverage for you while you're undergoing renovations, especially if it's minimal. Usually it's fine. If it's a larger, expansive renovation, especially adding square footage or anything of that nature, we're going to want to make sure that the coverage you have in place is actually right and is going to pay you at the end of the day if there is a loss. And then also making sure that it's insured to value so that they can pay you the proper amount if there were to be a loss with upgrades.
That dwelling number, that's something that I think it's just easy for people to sort of skirt past and not really pay attention to. But to Bry's point, with just home values going up, renovations happening, value being poured into houses either organically or proactively, that number probably should be looked at and cracked open and be like, hey, do I have the right coverage here? So, I mean, I imagine that's a conversation that either you're having, but you're probably bringing that to your clients, I imagine.
Definitely.
Yeah.
I mean, that's my underwriting brain working. Any type of new business, they're coming to me usually with a number that they already have their home insured for, but I'm crunching numbers on my end, knowing the market that they're in, teaming with risk managers at my preferred carriers here to kind of get their idea of a rough ballpark without actually stepping foot on the property, right? It's all just an estimate at this point in time. But I see a lot of people that are underinsured. And it's just about explaining why I'm coming up with this number, what's leading to all of that, and then what's the benefit of insuring it properly to value. And then also with these high net worth carriers, 9 times out of 10, they're going to do a sometimes or post-bind inspection. They're going to have their risk manager boots on the ground in the home, evaluating every piece of the home to come up with, at the end of the day, the proper number to rebuild your home, since a lot of these carriers are offering guaranteed replacement cost. So no matter what the loss costs at the end of the day to rebuild, they'll pay it.
And that's what you want. I think that's what we all assume, right? We all assume that's what the coverage is. Like, hey, get all my stuff back. Like, if it burned down, it'd be sad, but I can get it all back. But that's not always the case. If some of this as a listener is kind of like flying through your head, understand that Hanna works with like a lot of families that own multiple homes, like multiple high-end homes. A lot of them are coastal properties from what we understand about your business, high-end cars where like it's not just, hey, what did you pay for your house? There might be some special things in there, even like artwork and things like that. And Hanna, you were talking to us a lot about like non-occupied houses, like people's vacations homes that they're not spending, a lot of time throughout the year. Does that make it more complex for underwriting when somebody's not in their house for long periods of time because maybe it's a rental or something?
Rentals are going to be more complex than a secondary home just because there's additional risk in there with unknown individuals coming into your home and the liability perspective mainly. There's always going to be, the fear of property damage, but I would think that the larger risk with the larger potential for a payout is going to be the liability exposure there. But from the underwriting desk, from a secondary home, they just want to really understand how long is it continuously unoccupied for? Do you have a winterization plan if it's in an area that could freeze with freezing pipes? Yeah. Do you have a caretaker, whether they check the inside or the outside of the property, just to make sure that they have eyes on the home and can understand it? Do you have your temperature set at the right limit so that the pipes don't freeze? Do you have a water shutoff device installed? Do you have active central station fire burglar alarms? There's a lot of questions and a lot of devices that can be input to make sure that the carriers are comfortable at the end of the day. And then the rental exposure also is understanding, is it something that's listed on for a daily rate on Airbnb, VRBO, or are you renting it to the same family every year for 2 weeks for their summer vacation, and you rent it maybe, 1-2 months year round, but it's truly your secondary home? There's going to be, all these carriers are going to have different appetites for different types of those exposures. And so it's really up to us to understand what those guidelines are, properly communicate, get all of that information up front to share the story with the underwriter so that they can make an informed decision. It's not ever trying to get something by the underwriter, but help them fully understand the situation to be comfortable with the exposure.
That makes perfect sense. I mean, and I'm sure you've seen some, I'm sure you have your fair amount of stories too. I mean, where, now that you're not on the underwriting side of things, you're boots on the ground now. Mm-hmm. You're the one that are, you're talking to the clients, you're seeing these things. I mean, what are some of the circumstances that you've seen that's actually come into play? Maybe some wins, maybe some not so nice wins for families, but I mean, maybe something that'll motivate someone to say, hey, you know what, maybe I should crack open my coverage, make sure my liability lines up to my umbrella, or make sure that, whatever the case may be, because it's amazing how some little, stories or, little passing narratives or something that you hear in the most unsuspectable times, and you say, wow, that's really forcing my hand to look at something that is not that fun to do, but maybe it really protects me down the road if something happens that I can't see.
Yeah, insurance for the, everyday person is probably not that exciting. Luckily for you, I find it very exciting. So task me with that. I will look at all of your coverage all day and make sure that it's right for you. I think the goal, yes, we would love to always get the lowest price for our clients, but for us, we have a duty to make sure that we are properly insuring you at the end of the day and explaining the cost and the reasonings behind that. Just briefly, because you mentioned, liability on there and making sure you have the right limits. You have your underlying liability limits that stem from your homeowner's policy and also from your auto, your watercraft, those policies. And those are just a base limit. You should always have an umbrella or an excess policy that sits on top of that, because the max you're really going to get with those underlying policies is $1 million. And then what happens after that? What if you have a $2, $3, $4 million settlement? That's all out of pocket. Every additional dollar after that $1 million, right? If that's your limit. So with those excess limits, we want to make sure that it's really ideally matching your wealth at risk. So yes, the assets that we're insuring, but also your additional exposures that are tied to your name, your investments, anything that someone could come after you for. And so making sure that those are proper. And in these high net worth carriers, they're offering high limits, which is great. But also their rates are pretty competitive for that, which is nice.
Right.
That's something I think people forget about, right? When you have insurance, no matter what it is, whether it's health insurance, auto insurance, homeowners insurance, yes, you might be protecting that piece of property or that car, but more you're protecting your wallet in the case that something goes wrong in your life, right? So the wealthier you are, we've heard people go, I can self-insure against that. Yeah, you certainly can, right? You have enough wealth in the sideline that if your third or fourth home was washed away in a storm, like you probably pay for it again. But why would you? Yeah. Right? If you can go and borrow that money and use it from an insurance company and pay pennies on the dollar compared to what the property's worth, we find it confusing why people would even consider that. It's almost like, I just don't feel like having another bill or something like that. How do you talk and have those conversations with people?
That's why I think both of our roles go hand in hand, is because you're helping them build and maintain the wealth while I'm looking to protect it in an extra layer for you.
Well, I'll say this too. I mean, because you were just talking about liability, right? And how important it is to have umbrella coverage on your homeowners and even on the car. I mean, we actually heard a story somewhat recently about a family that was, relatively well off, not massively wealthy, but I mean, relatively well off. And they had disruptive liability elements where it didn't reach up to the umbrella. So they had a $3 million umbrella and they had reasonable liability, but there was a $500,000 gap. And someone explained to me that an umbrella policy is kind of like a rich old man with a stiff back, that he has to reach down. And if that liability coverage doesn't come up, that's as far as they're going. So that gap is something that can really take a baseball bat, to someone's wealth, and paying attention to that on a two-dimensional policy could literally be make or break. And having a setback wealth-wise for someone that early on, or even well into their life, could be devastating. So just looking at the limits, right? Making sure that the liability is there on a required level to the umbrella.
Yes. And you mentioned self-insuring, and that is, I'm finding it more common in this hard market that we're in, just because some premiums really are getting outrageous. And a lot of the high net worth individuals don't necessarily carry a mortgage and don't need to have insurance, right? Mm-hmm. And so I think that there's always going to be a conversation if someone's pushing that ideally we would have together. Make sure that they fully understand the risks of that. And if it makes sense and they're comfortable with it, as long as we can have that liability portion covered, they can take on the property risk. And I've come across that a few times. I had a builder's risk that the builder thought the insured and the client had the policy, and vice versa. The client thought that the builder's risk. I was looking at the whole portfolio, had a great phone call with the builder to get some information, to ultimately place that in the admitted market once it was finished. And they said, no, well, I thought they had it. And so jumped on that midterm. It had already been going on for a year. It still had about 8 months left. And so that's why it's really great to have, good relationships with these underwriters, with the carriers. I called them up right away. They got me terms the same day. But that's just a perfect example. And at the end of the day, he made the educated decision to self-insure that builder's risk. I got him that liability portion covered, but he decided to self-insure. And at the end of the day, he was comfortable with that decision. I gave him the pros and cons, and that's all we can really do as an advisor is give you all of the information, educate you, provide you with our professional opinion, but it's going to be your decision at the end of the day. And then one more piece that a few carriers are doing these days is actually risk sharing. So instead of just a standard, 2, 3, 5% deductible or $10,000, $25,000, $50,000 deductible, they're actually going to share, and the client's going to take on 25, 35, 40% of the loss and reduce their premium significantly, be in it for a larger chunk, but not the full amount.
Yeah, I mean, I could actually see that making sense, almost like a co-insurance philosophy, where you're like, for something that happens so infrequently, but when it does, it is a massive blow to the balance sheet, saying like, okay, if that happens, and it's almost like a larger deductible in a way. You're saying like, okay, I'm going to share this risk with someone else that has similar means than me, but I'm just going to have a larger deductible, but I'm going to fashion it in this way. That actually makes a lot of sense for the right. And
it makes the carriers feel a lot more comfortable too, because the deductible is the self-insured retention portion of it. So if carriers are consistently seeing that you're taking $1,000 deductible, which the high net worth carriers, they don't really love that. They like to see you take at least, 5,000. I'll quote 5 and 10 usually for my clients. Is that, hey, we're in this together. You know, and they're viewing it like that. So especially with the risk sharing, it can make them feel a little bit more comfortable.
In the case that, like, all right, you said that we help our clients build wealth. And so, Brian, we see our clients really sometimes go on rocket ship paths to success and net worth and all the properties and things that come along with that. When does someone go from like the regular insurances, so to say, the ones that we kind of see when we're driving up and down the road, to needing more of a high-end carrier or a specialty carrier? Like, is there a certain point in time or a certain amount of properties or net worth that someone should go, I probably shouldn't just be with the corner shop?
There's two parts to that, because a lot of the high net worth carriers, depending on the state, and again, with the market that we're in, they've kind of gotten more restrictive with their guidelines. So this base minimum that I'm going to mention has increased over time. Typically, it has been a $1 million replacement cost. So the dwelling limit that you mentioned earlier, $1 million replacement cost will put you into that high net worth. That is going to be their minimum. Now, a lot of areas have increased to 1.5, 2, 3, 5 million. Even, as a minimum for a replacement cost. And that's going to follow your primary home. You can have secondary homes that are below that. For the right account, they'll make accommodations for that. But it's usually the anchor, which is the primary home, would be at that number. But that doesn't mean if you have a $900,000 house, it doesn't mean that you shouldn't be with a high net worth carrier. There are some that are they have a high net worth arm, but they also cater to thresholds underneath the $1 million, and they'll still give you that increased coverage. But you're going to need to be protected for the other investments and assets that you have outside of that. If you have really high end cars, if you have just a lot of wealth that's just not put into assets. you're going to want to make sure that you have that high net worth carrier, because they're just going to be more equipped and be able to provide you with those higher limits that some of the standard carriers, it's just not within their appetite.
Yeah, it makes sense. So those higher net worth carriers, you said that the primary is the anchor, but if they have like a $5 million minimum, would they factor in the portfolio of real estate and, like, let's say supercars? Because I mean, that's not extremely uncommon.
Yeah, that's definitely part of my job as well, is kind of painting that picture for them and having them see the entire account and portfolio for what it is. And then also for me being a partner to them, though, if I know that they have this one short-term rental, I know that's not going to be in the appetite of the carrier, that high net worth carrier, but I don't want to jeopardize that. I know that I'm going to go place that elsewhere. I'm going to get its own excess policy because that carrier is not going to want to put a short-term rental on there. So bringing them the best of the best while managing it all and doing what's best for the client at the end of the day. And
that's just being good at what you do. I mean, that's just like knowing where to place your bets on the street, right? I mean, for your clients, that's great.
It's good. I hope that people are listening to this who are scratching their heads and going, oh man, like, maybe I haven't upgraded my policies to where they should be with my home values going up or my net worth going up, or I sold a company a few years ago and I really didn't change anything around. I mean, these are all like flash pan kind of events in your life that go, okay, things need to change. It's not just calling a wealth management firm like ours and saying, hey, there's more to kind of be investing, guys, into building upon. It's also, how do we protect those other risk areas in our life, like that rental property? We say it all the time to our clients. One of the risks to building a real estate portfolio is anybody who's a tenant in your property assumes that you are the wealthiest person on earth, right? And if, God forbid, something happens to them, they're hurt, or one of their guests is hurt on your properties, they are looking for your checkbook, right? That is just the way the world works. Here in South Carolina, when you drive up and down any of our highways, the billboards are all of attorneys who are essentially helping clients who have gotten injuries either at work or in somebody's home or in their cars. And the reason why those billboards are up is because the attorneys are making money because the claims are going through and somebody's paying that fine or that penalty.
And they are heavier than ever.
Yeah, and it's going to be you or it will be an insurance company, right? I mean, that's one of the things that people really need to think. And as your net worth goes up, people know, right?
Yes, we were talking briefly before we got on just about, high profile individuals and how to really properly insure them, because they're just like everyone else. They're going to need those higher limits. They're going to need that full protection. From an insurance perspective, it is a little bit trickier just because they are in the public eye. Maybe if they're younger, they're new to this much wealth, they're going to be flashing it on social media. So it's just being able to educate them a little bit on that, or if they're going to live their life, they're going to live their life, and just finding the right carrier for them as well. There are limitations that insurance carriers can put onto these policies. They can cap excess limits. They can put liable slander on there. They can put political figure limitations on there. So there's ways that they can craft it. But that's just a perfect example of how all of that's out there and exposing them.
It's amazing the stories that are out there. I mean, and sort of on the celebrity channel, wavelength, so to speak, you hear about, celebrities, like musicians insuring their hands or something like that, in case they can't play the piano. Does that ever seep into your world or not really?
It has not personally yet. I'd probably refer that out, but I do know that. I think Taylor Swift insures her legs, just as doctors insure their hands. That's all done through the hospital and everything though. But that's a little separate, but it is important.
Wow. Well, that rare art that's hanging on my wall of the house, right? Yeah, you live in the $1 million house, but then you have some piece of art that maybe was, given to you multi-generations, or maybe purchased because you're into it. That's something that you probably should go above and beyond like your regular coverage, right?
Right, because there are special limits of liability for fine art pieces, for jewelry pieces, for guns, for furs, pieces like that within your homeowner's policy, right? They're going to be capped out. Some endorsements can increase those limits, but typically not to as much as you need for those pieces that mean a lot to you. And they're also going to be subject to the deductible before they will pay out. So having a separate collectibles policy is going to be really important for that. And it can be done via blanket or scheduled. Scheduled is usually preferred because it makes the claim process pretty seamless. Description, that dollar amount, here it is. And so having those policies scheduled and understanding where they are, if they're on loan, to a museum, how is that policy going to respond? Because, these carriers, they understand that that's a normal part of these collectors' lives, is sharing that art with the world and understanding that it's properly protected. When you have a bank vaulted item and you want to take it out for a gala, making sure that the policy reads, when it leaves the bank vault, unless we have prior written permission, there is no coverage. So getting ahead of that, notifying the insurance carrier, hey, this piece is going to be out from X date to X date. Hey, this piece has been returned, full coverage when it's out of vault.
Because you don't need to insure the art, right? You have to insure the house. You have to insure your car, no matter what the value of the car is, right? I heard a story about a couple whose retirement plan was they had a piece of art. And if I said the last name of the artist, you'd absolutely know it. And their plan was, we're going to sell that. And that's going to be our plan. And if I was like, okay, so what's the insurance policy on it? We don't have it. They said, absolutely. Why don't you have it? And they said, it's way too expensive. He said, okay, but this is your plan. They said, he said, do you particularly like looking at it? They said, no. He said, sell it. Go to auction and sell it immediately. If you're refusing to insure it and you don't like it, get rid of it, pay the 20% and get done. And they did. That's exactly what they did.
So smart.
Great advice, right?
So smart.
So those even if you have something valued at $5 million or something literally hanging on your wall and you don't want to insure it because you don't have to, maybe take another approach to it. But my goodness, it's amazing what's out there.
A lot of these carriers too have unique partnerships with appraisers and fine art dealers, and they'll actually come to your home. They'll do a full inventory list for you. They'll give you risk management advice. Maybe you have that $5 million piece of art hanging above your fireplace that you light on a daily basis.
Right.
Terrifying.
Right. Terrifying.
But they're going to inventory things for you. They're going to get it appraised for you. They're going to store it for you if you need to. They're going to have that facility. So there's a lot of benefits out there with these specialty carriers that are going to take care of you and guide you, because it is interesting if you're not in that every day.
What are some of your favorite stories? I mean, that you've heard either through the grapevine or maybe some that have happened to you and your clients. And when I say favorite, maybe just like interesting, right? Maybe they were good, bad, or otherwise, or sideways, but something where you're like, maybe this would get someone who's listening to this to maybe take notice of something. Again, either good or bad. Do you have a story like that you'd say, yeah, this happened and this is real life, but it sounds like a movie?
Yes, actually. So this is going to be my colleague's story. Actually, it's a good one. And when I say good, just as you said, interesting, it's just a good example of how insurance works, why the right carrier and the right advisor and the right team, having that all in place is so crucial. So this is actually my colleague. He is another private client advisor on my team at Windermere, Griffin Thrower. And he had recently placed this high net worth client with a large national carrier. I think the home was probably insured for about $7 million for the replacement cost, with guaranteed replacement cost. Again, so at the end of the day, if your home costs $9 million to rebuild, they're going to pay you the $9 million. Why guaranteed replacement cost is just so important and valuable. Sadly, in the middle of the night, there was a total fire loss to the home. Oof. And it was a newer build. From an insurance perspective, this was pristine. Why would you not want to insure this home, right? You would think nothing would have gone wrong. So sadly, total fire loss in the middle of the night. And what happened was Griffin and our claims manager, Lily, the next morning, when they got that call the next morning, they went over to the property. They were there to be there to support the clients in this time of need. This has never happened to them before. How do they know how to navigate this at all? What questions should they be asking when the police are there, when the carrier is there, the adjuster, all of this? So they really jumped on and held their hand through that, which was amazing. But what's interesting about this one is it had just recently moved to the large carrier. I mentioned that they do post-bind inspections. This home was inspected previously. And when I say previously, it was the day before the loss.
Oh my goodness.
Okay, so the risk manager had taken it back to their desk and come up with their estimate of replacement cost. And so when I say TIV, it's total insured value, which is a combination of the replacement cost, the other structures limit, and the personal property limit. It came back $1.5 million higher of a TIV than it was previously. And so what was amazing with this carrier is within 2 days, the clients had a check for $200,000 in their hand.
2 days.
2 days. to have, like, I mean, I'm pretty sure that the adjuster had a check there and he was ready to do it for them. He just had to get it approved. So within 2 days, they had a $200,000 check, and this was to buy necessities. Within 30 days, they had paid out their full limits of dwelling, other structures, and personal property. And Griffin got on the phone with them because they got a copy of the inspection report after and said, hey, remember, you guys valued this at $1.5 million more than it was before. They made up the difference, and they honored that.
Kidding.
Yes. So the coverage that I haven't mentioned yet is called loss of use, additional living expenses. It's a few different things. And they had reasonable expenses or actual sustained loss. And this is an ongoing payment to provide you with housing at the time that, for the amount of time that your home is inhabitable due to a covered loss. And so with it being actual sustained loss and with it being a total loss, it could go on for 2-3 years, whatever it really the time would be to rebuild the home. And the great thing with these high net worth carriers is they are going to give you like, quality, and kind housing. So you're living in a $7 million, $8 million home after inspection. They're going to give you a home of like, quality, and kind for that amount of time.
It's incredible.
And so these carriers also typically give you about 6 months to decide what you can do. They give you 3 options, right? So they've already paid you, but you can decide to rebuild on site. And that's where that guaranteed replacement cost will come in. Same with rebuilding at a new site. They'll give you that full amount to rebuild. If it costs $9 million at the end of the day to rebuild it, they will pay that. Or you can choose not to rebuild and you can just keep the cash at that max limits of what they gave you and walk and do what you will with it. So it's nice that you have options with that as well. And what was really interesting and unique to what Griffin did, which we spoke about empathy in the beginning of the podcast, is he took it upon himself to make a donation to the Humane Society in the name of the family because they sadly lost pets in the fire. And he took that initiative and he knew that it would mean so much to the client. So that was just so amazing. Out of the goodness of his heart, he came up with this and it meant so much to the client and it bonded them so much more.
That's that empathy side of things, right?
Exactly.
I mean, that's really having superior and unmatched customer service. And, it's more than customer service at that point. It's actually being an incredible human being and doing the right thing professionally, but also doing the right thing from your heart and taking care of someone, that's not a great story, but great intention and sentiment behind it. And certainly noteworthy sort of hang on your hat there as a story that I imagine you'll be telling at least facets of that story for the rest of your career.
Yeah. But just the fact that, Griffin got on the phone with the carrier and got them an additional $1.5 million paid out because that was the right thing to do.
Right.
And he got that done because he has that relationship with the carrier, with the underwriter, with the claims team, which was really amazing. And I think, so I spoke with my risk manager too. So all in, it's about 15 million paid out so far.
Wow.
And that includes almost $1 million paid from a specialty car carrier. And then it's ongoing additional loss expense until they rebuild. And I think just kind of the biggest takeaway from all of this is to make sure that you're working with a trusted advisor so that you are properly insured for the absolute worst case scenario. And then for us in particular at Windermere, we're super lucky to have our internal claims team who helps manage this on the behalf of the client and is really a true liaison and has that relationship with the carrier, can really interpret the coverage and be an advocate for you and take a lot off your plate when you're already dealing with all of these new emotions that you're going through. And then also it doesn't just stop once the check is paid to the client, right? We're going to be there for you throughout the entire process because there's a lot going on. There's still insurance that needs to be paid and how to insure it properly because now you don't have the building or contents there, but you still own the land. You still have the liability exposure. You're renting somewhere else now. And it's just making sure that you're in constant communication with all involved parties because when communication lacks, that's when things start going through your head and you don't know how to handle it. And that can get really scary for someone, again, who's never been through it. And so just communication is going to be so key. And understanding from our perspective is just let us handle the insurance. We're going to insure it properly for you now. We're going to get you a builder's risk for when you start to rebuild. We have that new rental home listed as a liability extension on your policy. And then also the carrier is working with us so that you're not paying, your larger, say it was a $30,000 premium, for example, you're not paying all of that because that structure is not actually there anymore. Right. So doing all of that stuff in the background as well take something off their plate.
It's incredible.
This unless you have really bad luck, you only do this maybe once in your lifetime, right? So no, like, as much as people think they're prepared for these things, you don't even know what to be prepared for. Like things that Hannah you just said, like Brian and I, we are in an element of the risk management business. I don't know that I would be prepared if the house burned down or like a building burned down and we had to go and like figure out what to do next. To have a team of people that don't necessarily have to be there. It's not your job requirements for you or any of your teammates to be there, but like, like that's kind of part of the promise, right? Like, hey, we got you the policy, and if God forbid something were to happen in a devastating event, like we're going to be there to hold your hand through that claim process. I don't know if you get that, just by going and getting a policy online or something right? Like it's a totally different. You're getting a relationship, and I think when you keep on referring to these as like specialty carriers, like as your life gets more and more special, net worth, properties, all those kind of things, you need these types of first products, but also the relationships that go along, right? What would have happened to that family had, in this case, Griffin not been there? So much would have changed. Their lives would have probably been a lot more chaotic. It's not just about building the structure back up and saying, oh, I know somebody who could do that for me. It's about all those tiny micro processes that have to happen along the way. That's an incredible story.
And I think we also both understand that, these high net worth individuals definitely have high expectations as well. Sure. And so as a trusted advisor, not just meeting their expectations, but exceeding them so that we assure them that they made the right decision and really trusted us.
Yeah, because for a lot of those people, that's their baseline, right? I mean, we've all seen people who sort of toe the line of doing their job or even doing their job adequately. But then there's going above and beyond. There's, as they say, bending over backwards for your client. I mean, I don't know, Brian, I heard this cloth, I know you are too, is to let's be in that third camp, because these people that are entrusting themselves with us, they deserve that, right? And if we're capable to do that, if we're incapable, different, but if we're capable and we're in position and we have all the authority to go do that, my goodness, we should be doing that.
Mm-hmm. And it's not just a job, it's reflecting on us as individuals and our integrity and our moral compass and everything. We just have to do what's best for them.
Exactly. Yeah. Make your own pillow soft. If that's the only selfish thing that you get away with, make your pillow soft, knowing that you left it all out there on the field as a sports analogy, but like doing everything that you can, roll your sleeves up, whatever other, cliche I could think of. But I don't know, I think all three of us here on this panel are believers that there's always a little bit more juice that you can get out of that lemon, right? When I'm squeezing my lemon in my water, I'm like, it's not done yet. There's more in there, right? So you can do that in your job, in your profession. And I think if it helps people live a more comfortable life because of it, through their own success, they deserve it. This is great. Hanna, thank you so much. We're rounding, the 40th minute here. It feels like 4 minutes because this has been so insightful. Thank you for sharing your stories and your expertise and everything. This is absolutely great. So, we'll wrap here. Are there any other last words of wisdom or anything that you would want to share with people that may be listening to you? And or how can people find you? How can they come and talk to you about things that maybe something did stir in them that they have a curiosity about, that they want to come and find you and talk to you about this?
Yeah, absolutely. First of all, I'm happy to help. If it's even just giving advice, giving a second opinion, taking a look at your policies, I'm happy to just do that for you because I want to make sure you're comfortable at the end of the day. But really, my goal as an advisor is to protect the assets, the legacy, and minimize risks effectively. That's going to be ideally all of our goals at the end of the day. And just a reminder that, we're here to provide peace of mind to all of our clients, just knowing that really what matters most to them is protected at the end of the day, and it's in trusted hands. And then we're going to be really proactive with all of our risk management as well. You don't have to ask me twice. I'm highly organized. And I will always be proactive in asking all the questions and fighting for you and being that true liaison between what's best for you and what makes most sense for the carriers as well. And just remember that your advisors are your advocates, and they're going to fight for you and be on your team and be there to guide you through, sometimes the hardest times in your lives if you do need to use insurance in the future.
Well, I think we should rename this podcast, at least for this episode, Protecting Wealth on Purpose, because that's exactly what we've been talking about here. This has been awesome. Thank you so much.
Absolutely. Yeah. And then clients can reach me. I mean, I'm with Windermere Insurance Group based out of Charlotte, but I'm spearheading the opening of the Charleston office. So hopefully Q1 2025, we'll have a brick and mortar here. But we'll share my email and everything on the podcast online, but would love to talk to anyone that's looking for some guidance.
Perfect.
And thank you for having me.
Our pleasure. Thanks so much for being here. If you can't find Hanna, you know how to find us. So have a great rest of the day. Thank you for tuning in and listening. As always, we'll see you later.
Thank you for stopping by the Wealth on Purpose podcast. Your visit is very important to us. If you feel that you got something from your time, please consider subscribing and/or liking. For more, please visit us on granitebridgewealth.com, where a wealth of knowledge awaits.